Hi everybody, I am Ganesh Narvade and today we are going to revise alternate minimum tax. Yes, in short we call it as AMT. It is covered under section 115C. Generally, we completed income tax, we discussed all the provisions of income tax. And we know how to compute total income and we also know how to compute tax. But many assessees are there like Reliance, Sahara. This type of assessees utilized the tax provisions so effectively that they ended up paying zero tax every year. To counter such companies, government introduced MAT provisions. Yes, I am pronouncing it right. Minimum alternate tax under 115 JB. Now, similar provisions are introduced for other assessees. I said MAT under 115 JB was brought for company assessees. Now, individual, HUF, partnership firm, AOP, BOI, for them, alternate minimum tax provisions under 115 JC is brought. Basically, government should meet the infrastructure needs, so they need minimum tax at least. If companies use tax provision or other assessees use tax provisions such way that they end up paying zero tax, how will the government manage the things? Difficult, right? So government said that we will calculate normal tax as per regular provisions. We will also calculate AMT as per the scheme which I will be discussing further. Whatever is higher tax, that should be paid to government. Now when, how to calculate, all questions I am going to discuss in this lecture. So listen to the video till the end. Very important from the exam perspective. There is amendments in this provision too. Now, so let us understand the thing in a question answer format that would be easy for all of you. So is AMT applicable to companies? The answer is no. Is AMT applicable to other assessees like individual, HUF, partnership firm, LLP, local authority? The answer is yes. Sir, when it is applicable? See the three sections on the screen. If the assessee is claiming the benefit of 35 AD, if the assessee is claiming the benefit of section 10 AA, or if the assessee is claiming the benefit of section 80H to 80 RRB. If any one of these sections the assessee is claiming the benefit, then AMT provisions will apply. In the question, when they give numerical problems, they will not tell you that AMT provisions calculate tax as per AMT, nothing they will tell you. You have to identify whether AMT is applicable or not, and that you can do with observing that is 35 AD deduction given or 10 AA exemption taken or 80H to 80 RRB sections applicable. If yes, then AMT provisions you should apply and calculate tax. Now 80H to 80 RRB are income based deductions. 35 AD, you know, cold chain facility, hotel with 2-star or more accommodation, hospital with 100 beds or more, infrastructure projects, cross country pipelines for oil, natural gas, petroleum. So many capital intensive businesses are covered under 35 AD. 100% deduction is given for such business. And 10 AA exemption for those businesses which are operating in SEZ. So, if section 35 AD or 10 AA or 80H to 80 RRB, Presently 80H is not there, so it will start from 80IA to actually 80RRB. If any benefit is given or claimed under this, then AMT you should calculate whether it is given in the question, whether they asked in the question or not. Okay, let's. Now, next thing to understand that if you are an individual assessee, if you are an individual, HUF, AOP, BOI, AJP, see all these 5 assessees, slab rates are applicable, right? If their adjusted total income, that means these 5 assessees, individual, HUF, AOP, BOI, AJP, if their adjusted total income, which I will discuss in the next slides, don't worry, if their adjusted total income is less than 20 lakhs, then AMT provisions will not apply. If their income, adjusted total income, exceeds 20 lakhs, then AMT provisions will apply. Now for partnerships LLP, if you are a partnership assessee, right, then this limit does not apply. So if you are a partnership, if you are an LLP, then this 20 lakhs rule will not apply. Even if your income is 1 lakh rupees or 50,000 rupees or 1 crore rupees, irrespective of your adjusted total income, for LLPs and for partnerships or for local authority, AMT provisions will apply. Okay, very good. Now, how to calculate? So, first things first, normal income tax provisions will apply, first thing. So, to calculate your gross total income, you calculate income from salary, income from house property, income from PGBP, capital gain, other sources, gross total income, then deductions, then net income, right? The same provisions as we discussed in income tax, same will apply, nothing, no change. After that, we have to apply the step 1 here. And what is step 1? Tax as per regular provisions. So you need to calculate tax. You need to calculate surcharge if applicable. But please remember, don't add cess. Step 2, calculate adjusted total income. Now this is very important, critical for all of you, right? Adjusted total income is simply correct. You are understanding it rightly. Adjusted total income is simply your net income as per income tax provisions or total income as per income tax provisions. Then you will add the 3 benefits which you got. 35 AD deduction you will add back. 10 AA exemption whatever you got you add back. And 80 H to 80 RRB whatever deductions you got you add back. But remember, if you are adding 35 AD here, then at least normal depreciation should be provided, correct? Because when you added 35 AD, that means you are not giving the benefit of 35 AD. At least the assessee would have got normal depreciation, right? So that normal depreciation should be deducted. So I am calculating step 2 again. Come on, carefully listen. First take what? First take total income. Second, total income को क्या करने का? Yes, we have to add 10 AA exemption. Yes, you have to add second thing 80 H to 80 RRB, and then you have to add 35 AD minus depreciation. Depreciation as per normal income tax provisions you have to deduct, and then you come to adjusted total income. Very good. Now, once you get the adjusted total income, you have to calculate tax. You all remember simple things. If it is individual, HUF, AOP, BOI, AJP, less than 20 lakhs income, adjusted total income. If it is less than 20 lakhs for these assessees, the things stop here. No need to go further, no need to calculate AMT. But if it is adjusted total income is more than 20 lakhs for these assessees, then yes, you need to calculate AMT. For partnership firms, for local authority, for LLPs, no rule as such. Irrespective of your adjusted total income, you need to calculate AMT. Now, what is AMT? AMT is 18.5% of adjusted total income. 18.5% of adjusted total income. 18.5% of adjusted total income. Very good. Now, if your industrial or your business is in IFSC, International Financial Services Center, then this 18.5% will be replaced by 9%. This may come in MCQ questions, especially because it's a amendment. Okay. And in India, IFSC is in Gujarat. Right. Let's come to the next point. What is the next things to discuss? Now, once you do this, adjusted total income is calculated and your AMT tax is more than your regular income tax, right? Then the income tax deems that your adjusted total income is your deemed total income, that is deemed. And you remember the tax rate, right? 18.5% is the tax rate for AMT normally, and if it is in IFSC, then 9% of adjusted total income. Now, next thing. Do you need to get a certificate from a chartered accountant? Yes. When you file income tax returns, you have to get it attested from a chartered accountant and get a report from chartered accountant that your adjusted total income calculation is absolutely correct, not wrong. Now, the advanced tax provisions, the interest provisions, like interest provisions we discussed in 234A, 234B, 234C under, right? You all remember that sections, correct? Advanced tax provisions also you remember, right? That provisions will apply normally. There would be no change in the applicability of such provisions. Now, let's go to the next story. Now, when government says that you have to pay a tax as per regular provisions of income tax or as per AMT, whichever is higher. That means whatever is more you have to pay that tax. Perfectly fine. Not wrong. But it is injustice to you, correct? That you are paying more than your regular income tax. So that's why government decided to give you credit, AMT credit. How to calculate? This credit is given only when your AMT tax is more than regular income tax. Yes. So how will you calculate tax paid as per 115 JC? That is simply AMT tax minus your regular income tax you will get it. However, when you get the credit, you can utilize the credit in the next years. But the government will not give any single rupee interest on the AMT credit. You will not get any single rupee interest on the AMT credit. Very good. Now, this AMT credit will be carried forward for next 15 assessment year. Suppose your previous year is 1920 and assessment year is 2021. So in 2021 you got some AMT credit. So 22, 23, 23, 24, 24, 25, like that 15 years you can avail the credit benefit. You have the opportunity to utilize the credit. Now when will the credit be utilized? When your normal income tax provisions, your regular income tax becomes more than the AMT. If suppose in 23-24 assessment year, your regular income tax is more and AMT is less, then you can utilize this credit. So regular income tax should be more, AMT should be less. For that difference, credit of AMT which you have got can be utilized. Then they said, if there is any brought forward tax credit, right, from last years you brought forward certain tax credits, what will happen to it? How can you claim it? The answer is, you can claim, like I said, 2021 assessment year, I got some 1 lakh rupees as credit. Now 22-23, my regular income tax is more, my regular income tax is 10 lakhs and my AMT is 9 lakh 50. So can I claim total 1 lakh credit? Because 2021 I have 1 lakh AMT credit, right? And 22-23 my regular income tax is 10 lakhs. AMT tax is 9 lakh 50. So I can only utilize up to 50,000, not more than that. Because after claiming, after availing AMT tax credit, your tax should not go below AMT tax. That means AMT tax is 9 lakh 50. Suppose 10 lakhs is your regular tax, I said. AMT credit is 1 lakh. So 10 lakhs minus 1 lakh, what will happen? 9 lakh. But it is even less than AMT tax. This should not happen. So you can claim the benefit of AMT credit, but after deducting AMT credit, the regular income tax should not go below AMT tax for that respective year. Suppose 22-23 I said. So please make a note of this very important provision. Right. Let us go to the next thing. Now, the amount of tax credit in respect of any income tax paid. Suppose you paid any income tax in a foreign country, right? Suppose you are a resident and ordinary resident. So you earn in India, you pay tax in India. You earn in Australia, America, or Switzerland, still you have to pay tax in India because resident will pay tax on the global income. Correct? Now, when we pay tax on the global income, we also pay tax in that foreign country. So, should double tax be encouraged? The answer is no. That's why under section 90, 90A, 91, we get a tax credit for foreign tax. Now, if this happens, we get the credit for foreign tax, then what will happen? So, regular income tax we will take, minus foreign tax we will deduct. And after deducting foreign tax, whatever tax payable is left, if whatever tax payable is left, that means regular income tax minus credit for foreign tax, whatever resultant tax, if it is less than AMT, if it is less than AMT, AMT से अगर कम है तो क्या हो गया? When they compare, when they take the difference, when they check the difference, the entire difference will not be given as credit. Then what will be done? AMT tax AMT credit will be reduced by foreign tax credit. AMT credit will be reduced by foreign tax credit. You still have to pay AMT tax only. Payment तो कोई change नहीं है. Payment you have to do it for AMT tax only. But when the credit is calculated, it would be reduced by foreign tax, and such reduced AMT credit will only be allowed to be carried forward. Suppose regular income tax is 1 lakh rupees. Foreign credit is 20,000 rupees. Now you got 80,000. AMT is something, let's assume that AMT is 1 lakh 10,000. Okay, AMT 1 lakh 10, resultant tax 80. So will we carry forward 30,000? 1 lakh 10 minus 80? No. The answer is wrong. 30,000 you have to pay 1 lakh 10,000 to the government. That's for sure. Second thing, that is 1 lakh 10 AMT tax you have to pay to government. Second thing, 30,000 is your AMT credit. But this 30,000 should be reduced by 20,000 foreign credit. And only 10,000 AMT credit will be allowed to be carried forward. With this, we are coming to the conclusion of this chapter. Listen carefully. If the amount of regular income tax or the AMT is reduced or increased as a resultant of any order passed by the income tax authorities, that is Income Tax Act, then the amount of credit allowed under this section shall also be varied accordingly. So if there is any court income tax order, departmental order, government order, then if there is any change in the tax, the credit will also change accordingly. So these are the provisions in relation to AMT credit. Very important, it may come for 4 to 6 marks in your examinations for sure. MCQ questions can be expected, so do revise it for 1 or 2 times. Do solve the problems and subscribe to the channel. Hit the like button and share this video with friends so that all can be benefited with this lecture. Thank you all for patient listening.